The Spitfire European Property Recovery Fund seeks to initially exploit recovery themes in Europe by selecting discounted property investment opportunities that will provide outstanding capital growth and attractive levels of income.
Europe followed the US into the recession. It was widely called contagion, but what this highlighted was that Europe was not immune and also suffered similar problems. Like in North America, debt became the biggest issue, and strong-performing portfolios were irrationally discounted as many investors sold out of real estate, some for liquidity reasons, some from the herd mentality and panic. At the top of the market, cross-border money flows were pouring into investments in Central and Eastern Europe. As the downturn took hold, foreign funds left these new markets and returned to their historic centres. This was primarily driven by the opportunity cost of capital and relative risk. For example, the yield differential between prime offices in London and Warsaw was almost non-existent.
According to BNP Paribas Real Estate, for the first time since the last 7 quarters, the European Investment Market Index increased by a slight 2% in the 3rd quarter of 2009. Investors focused on high-quality assets, and vendors started to be attracted by the prices being offered. Moreover, there was an increase of large transactions due to cash-rich investors.
This time around, however, the wild, wild west of the wild, wild east is much more developed. In other words, this is not about first-mover developers or property companies importing new business practices. These are much more established markets than last time. This weight of money is starting to come back to the market and is expected to continue, particularly as interest rates remain low. Property is also starting from a lower base than has been seen for some time, with the possibility of offering inflation-hedged income and capital upside. Continental Europe's valuations are similar to those in the Americas, most of which lag the market significantly. There is a buying opportunity in these markets as valuations play catch-up.
The Spitfire European Property Recovery Fund will invest in open-ended property funds, listed closed-end property companies, global quoted property stocks, real estate investment trusts, exchange-traded funds, and any other suitable Europe's property-related investments.
The Spitfire European Property Recovery Fund is designed to monitor and take advantage of mispricing, regional yield differentials, and deeply discounted opportunities. The ability to move between traditional and emerging economic centres in Europe offers diversification. The ability to move between direct, indirect and real estate hedge funds allows the fund an enviable flexibility not really common in most real estate funds.
The Spitfire European Property Recovery Fund is listed on the Bermuda Stock Exchange, the world's largest offshore, fully electronic securities market, recognised by the US Securities Exchange Commission as a designated offshore securities exchange, and by the UK Financial Services Authority as a designated investment exchange. For an application form offering memorandum and more information about the Spitfire European Property Recovery Fund, click on the links below.